When you think of billionaires, what comes to mind? Elon Musk, Warren Buffett, Jeff Bezos, Bill Gates, the Rothschilds, Rockefeller, Ambani. Different industries, different eras, different ways of making money. But here's the common denominator. Every single one of them has something to do with real estate. That's not a coincidence, because while businesses rise and fall, technology shifts, and trends fade, real estate remains. It's the billionaire's secret weapon, not because it's flashy, but because it quietly does what no other asset can: generate income, store value, protect against inflation, and create dynasties that last for generations. Today, we're unpacking the real estate business in detail. We'll look at the advanced strategies billionaires use, why property is still the ultimate wealth builder, and what you can learn to start thinking like the ultra-rich. Real estate is unique. It is the only asset class that combines consistent cash flow, long-term appreciation, leverage opportunities, tax advantages, and tangible utility. It doesn't just sit in your portfolio. It actively works for you. A stock can lose all its value overnight. A business can collapse under competition, but people will always need land and shelter. That makes real estate both defensive and offensive when it comes to building wealth. It protects you during downturns while multiplying your fortune during expansions. This is why 90% of billionaires either made their fortune directly in real estate or used real estate as the foundation to preserve what they had built elsewhere. One of the greatest advantages of real estate is the stability it offers. Property generates recurring income month after month. Apartments, office towers, warehouses, or hotels all create consistent rent or lease payments. That steady cash flow is invaluable. Unlike volatile stocks or speculative assets, landlords can predict their income. Billionaires love this predictability because it allows them to borrow against their properties, reinvest the cash, and expand their empires. A skyscraper in New York might bring in tens of millions in rent each year. That income funds new projects, acquisitions, or debt service, while the property itself continues to rise in value. Even on a smaller scale, the principle is the same. One rental apartment, managed well, can be the seed of your personal wealth machine. Another driver of wealth is appreciation. Over time, properties in key locations increase in value. Not everywhere, of course, but in global cities and financial hubs. The trend is clear. Why does this happen? Scarcity. There's only so much land in Manhattan, Monaco, Singapore, or central London. Populations grow, businesses expand, and demand intensifies, but supply is fixed. That scarcity drives values higher, decade after decade. This is why billionaires buy trophy assets in prime locations. A penthouse in Hong Kong is not just a luxurious residence. It is a scarce asset in one of the world's most competitive real estate markets. It generates prestige, but more importantly, it quietly compounds in value over time. The ultra-wealthy don't think in terms of months or even years. They think in decades and generations. They don't flip properties, they hold them. One of the most advanced yet overlooked benefits of real estate is how it interacts with inflation. Most people fear inflation because it erodes the value of money. But for real estate investors, especially those who borrow, inflation becomes a secret weapon. When you take out a loan to buy property, you're locking in today's dollars. Over the years, inflation reduces the real value of that debt, while rents and property values climb. Imagine borrowing $10 million at a fixed interest rate. 2 decades later, inflation makes that debt feel like $5 million, but the property you bought is now worth $20 or $30 million. Rents have doubled, but your debt payments remain the same. This is why billionaires are not afraid of inflationary periods. They welcome them because their assets grow in nominal value, while their debts shrink in real terms. On a smaller scale, the same principle applies to everyday investors. A fixed-rate mortgage is often the best friend you can have in times of inflation. Real estate is also unique because banks love it. They're willing to finance most of the purchase price, something they rarely do for other assets. This opens the door to leverage. Large deals are structured using what's called a capital stack. At the base is equity, which might be the investor's own money, or capital raised from partners. Above that is senior debt, typically the cheapest capital, provided by banks. Then there may be mezzanine debt or preferred equity, which fills the gap with higher risk and higher return. Billionaires understand this system inside out. They rarely use all their own money. Instead, they design deals so the tenants effectively pay for the property. This is how billionaires can control billions of dollars in real estate while only putting a fraction of their own wealth at risk. Another powerful tool is refinancing, also known as equity recycling. Here's how it works. A billionaire buys a building. Over time, it rises in value. Instead of selling it and paying capital gains taxes, they go back to the bank. The bank revalues the property at its higher worth and offers a new loan. The owner pulls out millions in cash, tax-free, because it's structured as debt, not income. They then use that cash to buy more properties. This cycle can continue indefinitely. Properties appreciate, get refinanced, and fund the acquisition of more assets. This is how empires scale from one building to entire city blocks. Billionaires don't just buy existing properties, they develop new ones. Development is the ultimate way to create value. Take a piece of land worth $50 million. Once developed into a high-rise or shopping center, it could be worth $500 million. That value didn't exist before. It was created by vision, design, and execution. This is why names like Donald Bren in California, Stephen Ross in New York, or Mukesh Ambani in India dominate their markets. They don't just wait for opportunities, they build them. Development is riskier, but it creates immense upside that simple ownership can't match. Another strategy is land banking. This means buying large tracts of undeveloped land in areas expected to grow. The billionaire sits on the land for years, sometimes decades. As cities expand, the value of that land explodes. It's slow, it's boring, but it's how dynasties are built. Families like the Rockefellers and Rothschilds became synonymous with generational wealth because they understood the patience required to let land appreciate over time. Modern billionaires don't think locally, they think globally. Sovereign wealth funds from the Middle East buy entire office districts in London. Asian billionaires pick up trophy assets in Silicon Valley. Middle Eastern royals own landmark hotels in Paris and New York. These moves aren't just about money, they're about influence. Owning a piece of Manhattan or London is a way of owning soft power on the world stage. Real estate also comes with powerful tax strategies. Depreciation allows billionaires to reduce taxable income by writing off property value as if it were wearing out, even as the property rises in worth. In the United States, the 1031 exchange allows investors to sell one property, reinvest the proceeds in another, and defer taxes indefinitely. Properties are often held through trusts or LLCs, which provide liability protection and privacy. This is why billionaires seem to pay so little tax. The system rewards asset owners, not wage earners. Every real estate market moves in cycles. Boom, bust, recovery, expansion. Billionaires understand this better than anyone. They don't panic during downturns. They prepare. When assets are cheap and lenders are nervous, the wealthy with cash step in. They buy aggressively, holding through the recovery. By the time the next boom arrives, their assets are worth multiples of what they paid. Crashes don't scare billionaires, they wait for them, like hunters waiting for the right season. So what's the lesson for you? Now, real estate is not just a business, it's the ultimate wealth machine. It generates steady cash flow, it appreciates in value, it allows you to use other people's money, it protects you from inflation, and it provides the foundation for dynasties. Every billionaire knows this. That's why they all have real estate in their portfolio. And now you know it too. The only question left is when you're going to start building your own empire. If you enjoyed this deep dive into the world of real estate and billionaire wealth strategies, don't forget to like this video, subscribe to the channel, and hit the notification bell so you never miss the next one. Thanks for watching, and I'll see you in the next video.